Hello everyone, this is Juan Sarmiento and today is Friday, October the 8th. Okay, I have a proposed trade here on Oracle. So let's get that out of the way and then we'll go through all our trades here and see what we need to do. Okay, Oracle, you can see that they beat expectations by a wide margin. That's good. The volatility skew is practically non-existent. The front month and back month options have about the same volatility. Liquidity is relatively low and the current IV percentile is a little high. But because everything else seems to check, I'm going to go for it anyway. Okay, so I'm going to copy this. This is a trade I have copied from here and I'm going to paste it in the platform, and here it is. Let's analyze that and see if we need to change anything. Okay, I could go higher. Let's duplicate that trade. Let's say analyze trade and then change the 90 to 95. Just need to make sure that it's a better trade overall. But in general, in my experience, it doesn't make that much of a difference. You can see the 90 is a little more expensive, so you can try the 95, which is, you know, closer to the strike price. So let's try that one. You can see that the volatility skew is a little different, but actually lower volatility. So I'd rather do that. Okay. And then we have the front month options are then in January the 21st, and you can see that for that are 105 days to go, and that's fine. The front month option I'm having here, or November the 5th, we could also try November the 12th. The difference is minuscule, really, I'm sure. But in days, it's just a few more days. And it's cheaper as a consequence. I think the volatility skew is still acceptable, so let's do that. Okay. That way it's cheaper. And then when we create the trade, confirm and send, we say multiple here, and then we adjust so that it is about 10% of our account, the overall trade. So increase the number of shares, 7,900. That's well within the range. If I did one more, that would be too high. So five lots. Okay, so I'm just gonna send that off, and I will adjust through the day if necessary to make sure that it gets filled. Okay, let's go and through all of my trades here and see what needs adjustment. Let's put the account here. Okay, so Apple. October 15th is the expiration. Okay, if the current price was over here, I would tend to roll it over 1 week ahead of time. But because it's way out down here, let's take a look at the chart, and really it's delta neutral. It's only 11 points delta positive, which is good. Okay, it needs to be a little positive. Okay, and 155. If I felt that the stock was going to bounce up strongly, I would adjust this by lowering my put, my outstanding put. Again, that's the one outstanding put, that is 2 long puts minus 1 short put. That's 1 outstanding put. Okay, the difference. We say analyze rolling, and we will lower the January 22 put to 140 or 145. And make sure that it's the same expiration. But if you did that, then it's too bullish, in my opinion. Okay. We can do a rollover here of the put side to the next month. So that will be November the 12th. And again, volatility, I mean the delta is a little too high. So because it's delta neutral, I'm willing to wait until next week, which will be on the day of expiration, to do perhaps short the additional put and roll over the call. We'll do that next week. Okay. So from now, I'm going to lock this up and see if it was an advantageous move. Let's go to COP. Oh, here you can see the smiley faces here, and the stock price is above the smiley face. Okay, so that's my indication that I should do a rollover. Okay, so I'm going to do a rollover or sell a call. Okay, because we have plenty of outstanding calls, you see you have 10 minus 5 is 5 outstanding calls, you can sell one. So just selling one reduces my delta quite considerably from 101.5 to 28. Okay, and that's a way to take profits. So I'm going to sell the one here. You can take a look at the chart. It's been making new highs, so at some point it's going to reverse, and let's just say I've been lucky. Let's take some profits off the table. And now it's still delta positive, so if the stock continues up, I could still make money, but I could still sell some of the additional calls. Okay, that's good enough. Let's go to CRM. October the 29th, so quite a few days before that. Let's take a look at the chart. It's moving sideways. I don't really need to do anything. FFIV, now that's right in the center of my cone, and the expiration comes next week. Now here I find it useful to do a rollover if I need to. Let's go to the monitor tab, account statement, and here's my trade. So that's $674 in profit. Do I want to stay on the trade? I can just say, okay, it's moved sideways, made me money on the sideways, good enough. You might wait until Monday or Tuesday, but I really don't recommend that. It's moving sideways, the earnings are coming up. I say, well, I don't want to cross the earnings when it's so dead center here. So we're going to just sell it, okay? I'm not going to go through earnings when it's, because any strong move is going to be prejudicial to me. Okay, where I'm in the center, and so let's just collect the money that we have made. Okay, that will close the trade. Let's go to low. Oh, that was it. CRM. What's the trade? I forget now. Yeah. FIV just disappeared from my list already. Oh yeah, so yeah, that's good enough. Let's move on to LOW. Okay, this is same kind of scenario. It's very close here. Let's see. Let's take a look at the chart. Wow, this is like moving sideways, like it's going to go strongly in either direction. We don't know. And October the 22nd, that's 14 days from now. So next week we'll see what we're gonna do. For now, it's fine. MS. Okay, earnings are coming up as well. Let's take a look at the account statement and see what we have collected. Let's see, Morgan Stanley year to date. Well, this is a loser, so no point in prolonging anymore. Let's just close that and take our loss. Oh, it's expiring today anyway. It expires today, so let's close that. No, all you have to do is select everybody and say analyze closing. Actually, we can do the put side and the call side separately. Okay, so let's select first. Let's do this. Analyze closing. Double diagonal. US adjusted by saying custom. Okay, so we have 7 calls that we're going to sell, 8 calls that we're going to puts that we're going to sell, and then 4 calls that we're going to buy back, and 4 puts. That should close the trade, and it gives us 45.89. So I'm going to set that up, okay? If I had trouble getting out of the trade, I can always do the call side first. And then the put side second. And you need to adjust the number. So for example, the call side we're selling 7 calls. Make sure you say custom. 7 calls versus 4 calls to buy back. There. And that's 27. Yep. And the put side is 3 and 8. 8 to sell. Again, custom. And 3 to buy back. All right. And yeah, I think I'm going to leave it the way it is. Sometimes you see a difference, like the put side might be $1 versus 15 on the call side, and then you want to make sure that the call gets done first because it's the most profitable or richer in this case. So I'm going to do the consecutive, the 2 trades, and adjust until it gets done. And don't be afraid to go down. We are just trying to collect your money that you have invested on that. Okay, we can adjust the price here of the Oracle trade. Okay, we'll come back to that. Let's move on, okay? That was MS, Nike. Okay, Nike, we're here in the middle of it, and as you can see, we have October expiring today, and then the calls are, and the longs are expiring next week. Okay, we got the MS field, which is a good thing. Let's check that out before we move on. Morgan Stanley, MS. Yeah, that's gone. All right. So the double trade worked out. Sometimes it's harder to fill it up, so you can split it, call side, put side. That's your choice. Okay, let's move on to Nike again. Okay, you can see that we are right there in this, very close to the center, and we are closing the call side first. Okay, let's do that by saying analyze rolling, and yeah, you're buying back the 4 calls, but you're selling 4 calls. So we need to customize that, 4 calls. So let's do the call side first. Then the put side. The put here, this put is about to expire, worthless. So you can You could sell the puts. Let's just analyze rolling. And we're buying 4 and selling 5. Okay, that put side got filled, which is a good thing because we can now wait a little longer for the call side. And then we have this 175, that's probably worthless. 5 cents. You can leave it there as a lottery ticket. Let's adjust the call side. Until it gets filled. I will keep changing until every trade. Okay, that got filled rather quickly, and then we have Oracle. Let's go to NVIDIA. And here is October. This stock. Let's go to the monitor tab, account statement. Well, this is a big, oh no, I was it a big, but somewhat of a loser, some of a loser. Let's give it a chance for next week here, but I'm not too hopeful. I'm just, and then the Oracle trade. So then NVIDIA, I'm gonna wait until next week, all right? You should be doing it. We should be doing it really. We should be closing it. But I wanna keep that option open. I have this feel that the market is going to continue the wave down, and so I don't want to be caught without any trades. So I'm going to leave that NVIDIA there. It's just my choice, okay? You can close it if you don't want to try it anymore. And that's all for today. Thank you very much for joining me, and I'll just make sure that this trade gets filled. Thank you very much. Bye-bye.